Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Everbright Water Limited annual report. China Everbright Water Limited offers a diverse range of businesses and services related to water environment management. At its core, the company provides municipal wastewater treatment, which involves collecting and processing sewage from residential areas. It also engages in industrial wastewater treatment, where it helps factories and manufacturing facilities manage their wastewater. In addition to these services, China Everbright Water Limited offers water supply solutions, providing clean drinking water to communities. The company is also involved in reusable water management, where treated water is reused for non-potable purposes such as irrigation or toilet flushing. Furthermore, the company provides sludge treatment and disposal services, ensuring that waste from wastewater treatment plants is properly managed. The company's expertise extends to sponge city construction, a concept that involves creating urban spaces with green infrastructure to manage rainwater runoff. China Everbright Water Limited also participates in river basin ecological restoration projects, which aim to restore the health of rivers and their surrounding ecosystems. Moreover, it offers livestock and poultry manure resources utilization services, where waste from farms is converted into valuable resources such as fertilizer or biogas. Lastly, the company provides leachate treatment services, which involve managing toxic waste from landfills. China Everbright Water Limited also conducts research and development on water environmental technologies and engineering construction, ensuring that its services are always up to date with the latest innovations in the field. The Cebu water stock price increase. A brief overview in the past year. Several publicly traded companies related to water utilities in the Cebu region of the Philippines have seen their stock prices increase. Among them, Manila Water Company Inc. and Cebu Air Inc. have experienced a notable rise in their stock prices. Manila Water Company Inc., for instance, has reported a significant increase in its stock price, with a 31.45% change over the past year. This can be attributed to several factors, including strong first-half performance, tariff adjustments, acquisition of Wawa JVCO, and positive sector sentiment. The company's robust performance across its domestic and international businesses, driven by higher tariff rates, has contributed to its increased stock price. Cebu Air Inc., the operator of Cebu Pacific, also saw a notable increase in its stock price, with reported changes of 15.9% and 12.42% over the past year. A key event supporting this upward trend was the company's P2 billion share buyback plan announced in November 2024. In contrast, China Everbright Water Limited has experienced a recent decline despite an earlier reported annual change. The company's stock plunged over 9% after announcing its annual results for the fiscal year ended December 31, 2025, which showed a 22% decrease in revenue and a 17% decline in profit attributable to equity holders compared to the previous year. Overall, while China Everbright Water Limited has seen a recent downturn, Manila Water Company Inc. and Cebu Air Inc. have experienced a notable increase in their stock prices over the past year, driven by various factors such as strong performance, tariff adjustments, and share buyback plans. China Everbright Water Limited trades at an unknown price-to-earnings ratio of 4 times and an unknown price-to-book ratio of 0.33 times relative within the industry. This suggests a potential market detachment, as China Everbright Water Limited trades at discounted levels, while the broader industry remains fairly valued, warranting deeper fundamental analysis. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 6.12%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in a company's financial performance can be identified through an analysis of various business segments. Revenue decline is primarily driven by the decrease in municipal wastewater treatment and construction services. The water environment management business experienced a decline due to decreased activities, while Customer One's revenue also saw a significant drop. On the other hand, revenue growth is attributed to the expansion of the water environment management business through sponge city construction, river basin ecological restoration, and R&D of water environment technologies. Additionally, revenue-generating contracts in energy management, contracting, EMC services, subsidies, and solar power generation facilities contributed to the growth. The industrial wastewater treatment, water supply, reusable water, sludge treatment, and disposal segments experienced no significant change in revenue. Similarly, energy management contracting, EMC, service contracts, subsidies, and solar power generation facilities remained neutral with no notable impact on revenue. The net income of the company experienced a significant decline between FY 2024 and FY 2025. Initially, it decreased by 17% from $19.61 million to $142.48 million. However, this trend continued with an even more substantial drop in FY 2025, where the net income plummeted to a loss of $23.31 million. The profit margins of the company showed an improvement in FY 2025 compared to FY 2024. The profit margin increased by 6 percentage points from 38% to 44%. This increase was attributed to various factors, including improved operational efficiency and effective cost management. However, this trend was short-lived as the profit margins declined due to several reasons such as recognition of late payment charges on VAT, decrease in government grants, and an increase in sundry expenses. The company's financial performance indicates a strong ability to generate cash from its core operations. According to various reports, the company has achieved a significant net cash inflow from operating activities in FY 2025. Specifically, the operating cash flow for the group and the company were $219,111 and $823,119 respectively. Additionally, net cash flows generated from operating activities were reported as $123,250 on page 9 and $111,419 on page 10. These figures collectively demonstrate that the company is generating positive operating cash flow in FY 2025. The company's debt level and interest expenses have undergone significant changes over the period in question. In terms of debt levels, while total non-current liabilities have increased slightly, current liabilities have seen a notable increase. Specifically, borrowings under current liabilities have risen by 54.3%, contributing to an overall growth of 33.8% in total current liabilities. Conversely, non-current liabilities have experienced a decrease of 11.1% due to a reduction in borrowings. Interestingly, despite the fluctuations in debt levels, interest expenses have actually decreased. Interest paid has dropped from $536,096 million to $454,277 million, representing a decline of approximately 15%. Finance costs have also seen a decrease of 10%, falling from $541.08 million to $484.72 million. These reductions in interest expenses suggest that the company is either paying off debt or benefiting from more favorable interest rates. The recent market analysis has revealed a mixed performance across various segments and regions. On the negative side, traditional business segments in the Chinese mainland have struggled, as have markets outside of China. These areas have failed to meet expectations, indicating a need for reassessment and potential revamping. In contrast, emerging businesses have shown impressive growth, demonstrating their adaptability and resilience in the face of changing market conditions. Core regions have also performed well, suggesting that these areas are better equipped to handle the demands of the modern business landscape. Management's primary focus at present is on cost control measures to ensure the company's financial stability. To achieve this, they are maximizing operating capabilities, leveraging centralized procurement, strengthening budget management, and accelerating technology development to reduce costs and improve efficiency. While these efforts aim to mitigate financial risks, management acknowledges that recovering returned VAT refunds and late payment charges may be challenging. The likelihood of successful recovery is considered remote, indicating a cautious approach to managing potential losses. Management's emphasis on cost control and financial metrics suggests a conservative strategy aimed at maintaining the company's financial health in the face of uncertain market conditions. The company has made significant investments through mergers and acquisitions in various key regions. This strategic move aims to expand its market presence and increase its competitive edge. The acquisitions are a crucial part of the company's growth plan, allowing it to tap into new markets and customer bases. In terms of divestitures, there is no mention of any such activity in the extracted summaries. It appears that the company has focused on expanding its operations through acquisitions rather than divesting existing assets or businesses. The company's financial reports indicate that it has indeed paid dividends in the past 2 fiscal years, FY 2024 and FY 2025. Specifically, on page 6, it is mentioned that dividends were declared for both years, while on page 10, it is confirmed that these dividends were actually paid to shareholders. Furthermore, pages 19 and 40 also explicitly state that the company has paid dividends in FY 2024 and FY 2025, including a final dividend of $100 and $66.82 million for FY 2024. Additionally, page 42 highlights the payment of dividends to both shareholders and non-controlling shareholders of a subsidiary. These multiple references across different pages confirm that the company has a history of paying dividends to its stakeholders. That concludes the financial summary for China Everbright Water Limited. Feel free to comment below, and I will be happy to answer them when possible.